let's
Thank you for
talk
having me.
first about the Italian unsaga, which is really every day amazing headlines this week. What's your exposure to Italy?
We have a very limited exposure to Italy, just very limited, actually.
Have you made any adjustments to your portfolio considering what's been happening over the past 4 or 5 days?
Now, both based on having a very limited exposure, but also we are a long-term investor, and we just see a long-term view on this and have made no changes based on this.
What is your long-term view?
Well, of course, we are managing assets for pensioners, so you might say with 30, 40 years horizon on most of our money. So we are looking through this cycle and actually use the opportunities when something like this happens. It's also a big opportunity to do something in the portfolio to increase the revenue, the results going forward.
Right. I mean, if you have a positive outlook on, for example, Italy's membership in the European Union, you might just want to buy the debt when it's yielding 3.1%.
That's absolutely a possibility, and I think overall it's opportunities with the low volatility we have had in the market. What's happening now, it's both risk and opportunities in the market, and we are utilizing that in the best possible way, of course.
So what's your outlook then for rates? I mean, I'm going to go to Riga in a couple weeks to see the ECB meeting there, and a lot of people have talked about maybe they're going to need to change their schedule as far as when they want to get out of QE. Do you still see it happening for September?
Yeah, I think basically the economic is moving forward. There is growth coming through, both in the Eurozone and, of course, especially in the US. And that calls for normalization in the economy. And I absolutely believe we will see small steps, but increase in the rates going forward.
All right, let's change tack here a little bit and just talk about the sustainable investing.
Yeah, love to.
You've looked deeply into this. You're very involved in it. It seems a little counterintuitive as Norway is such a big oil and gas producer. How do you sync those two kind of juxtaposed views?
I think it's on the contrary, because being that exposed with oil and gas, it's almost having all eggs in one basket. We need to diversify our economy, and that's why we also are very positive for the solution now for the sovereign wealth fund to divest from oil and gas investments, because we have that exposure for the country as a whole very much into oil and gas, and we need to withdraw where it's possible to withdraw from this kind of exposure.
So a lot of this, obviously, investment thing is about timing, right? Do you see the sovereign wealth fund divesting quickly enough?
Well, I think it's all about risk and possibilities here again. And of course, I think the right thing, if you look at what is needed to be done in the world to meet the Paris Accord, it's tremendous shift in the economy that is needed to be done over the next 10, 15, 20 years. And you can be tactical about timing here, but I think the long-term direction of this is very clear. And you can be sitting with stranded assets if you not really are moving in this direction. And with the long-term view we have, it's very obvious for us to move into more fossil-free exposure.
You started your first fossil-free fund, I think, about 2 years ago, right? Yeah. Talk to me about the growth that you've seen there, the popularity, and also who's investing. I mean, is this millennial retail investors? Are you seeing institutions pile in?
Yeah. Now, we launched this 2 years ago, and it's absolutely been the fastest growing fund family I ever have seen in my life. These days, 8.5% of all our assets now are invested in this fossil-free fund family. It's started, of course, with institutional investors. It's also interesting to see we have exposure both in Norway and Sweden. That's our core markets. We see that the Swedish institutional really moved forward to this very quick, and it's a big product in Sweden. These days we also see Norwegian also institutions comes along. Then we actually take a view for our 1.9 million clients, saying that we also include this as a part of the overall investment for our pension clients. So everyone has a part of this being a client with Storebrand.
All right, excellent stuff. Thanks so much for joining us. Really appreciate your time. Arild Grefstad, Chief Executive Officer of Storebrand, which has $89 billion of assets under management.